Hey everyone, back. Do a quick sound check and we can get started. Good evening, good morning, good afternoon, depending on where you are. Okay, audio seems to be good on my side. Welcome back to news trading session number 2. This is going to be your theory and practice. My name is Vito Yodo. So if you jumped in on last week's NFP session and wondering what we were doing, this is where the session is. We will talk more about the order types that you want to be using, and some of the pros and cons to news trading. So this is going to be your theory and practice. As per usual, any opinion discussed in this webinar or links to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility. Market reaction to news can be swift and unpredictable, which leads to higher trading risk and delays in execution. So be very attentive when determining the volume of your transactions and consider all possible risk factors. All right. So welcome back, and I do apologize ahead of time. I actually have a very bad flu, so I might actually pause and mute for a little bit just in case if I need to kind of sneeze out. Okay. All right. As a bonus for participants, we are going to be showing you the promo code to double your deposit bonus. So make sure you use the promo code you're depositing into your trading accounts to get your double deposit bonus. And you should have access to the private Telegram channel as well if you register through email. Okay. Okay, cool. So a little bit about myself. My name is Vito Yodo. I've been a full-time trader with over 20 years of experience this year. Professional trading coach and technical analyst since 2007. I'm also an expert in Ichimoku Kinko techniques, technical analysis tool. I'm also the director of Zenefix, an independent market consulting company, and I've also been invited as a guest speaker at Trading Investing Expo across Australia, Invest Fair Singapore, as well as the ATAA and the APTA conferences, which is the Australian Technical Analysts Association and the Australian Professional Technical Analysts. Okay, so tonight we are going to talk about some of the advantages and disadvantages of news trading, the most profitable news for trading, some of the 3 main phases of price movement as well that we need to understand, some general rules for news trading, and then we'll take a look at examples of pending orders. We'll take a look at the sell stop and the buy stop strategy, as well as the buy limit and sell limit strategy. And then we'll also take consideration into trading after the news release as well. Okay, cool. So this is the code. It's non-farm 2023. I believe this is a old code. I actually forgot to update my slides for this one. We just got a new promotional code, but this code should still work. Just in case if the code doesn't work, please ask the customer service, but this code should still work, hopefully. I haven't updated this, but there's actually going to be a new code for 2024. It's actually non-farm 2024. Simple as that. So make sure you're using this code if you're depositing into your Octa trading account. Cool. All right, let's take a look at some of the disadvantages and advantages and disadvantages. We'll go through with advantages first on this one. So with news trading, let me pause here for a little bit. News trading, it's very different to fundamental analysis. Okay, so when we talk about news trading, it's not really fundamental analysis. It's actually trading the news itself. We are reacting to the actual release date, Let me pause for a little bit. Sorry, guys. Okay, so when we talk about news trading, it's very different to fundamental analysis. Fundamental analysis, we do analysis on the whole economic numbers that gets published every single month. But news trading, when we talk about news trading, is actually trading during the actual news release itself. It's neither a technical analysis or nor a fundamental analysis. It's kind of somewhere in between. It's a very unique thing by itself. The advantages to news trading is that all the necessary information can actually be found in the economic calendar, so there's no need to delve deeply into the technical and fundamental analysis, right? So news trading is very independent. You can actually, if you understand what we go through tonight, you can actually trade without even knowing the technical and fundamental. If you know, it's good. It's an extra tool, but you don't need to understand it to be able to news trade, okay? So I would say that's an advantage. And events in the calendars are ranked in order of importance, which helps in making adequate decisions. We know what news is going to create a lot of impact in the market. We know what news doesn't have an impact in the market. We know what news that can be categorized as medium impact. It might have an impact. It might not have an impact in news. Okay, so there's a lot of fundamental news out there. Not all of them are of equal weight. Okay. The other advantages with the publication of statistical reports noticeably increases volatility. This allows traders to potentially earn significant profits. Okay. And the simplicity of a strategy, you just have to know how to open and close orders without the need to learn any complex formulas or any other strategies. And I'll show you tonight how we do it. But if you want to have a taste of, how we actually really do it, every month since last year, we have been doing the live NFP trades and the live CPI trades. We did ours last week on the 2nd of February, last Friday. And if you didn't join in and you want to join on the next one, it's actually going to be on the 13th of next week. We are actually going to be trading the CPI live. But if you take a look at the videos there, it's very simple. You know why? Because it only took me 5 minutes to kind of set up the positions. And yeah, we basically take advantage of that 5 minutes before the news to kind of set our positions. And once the news hits, we do our position adjustments and we let it run. And last week was a crazy run, right? A lot of you guys that were here last week, you guys were probably laughing it all the way to the bank because you can hold on to your positions and the market basically was in your favor up until today. Okay. So very simple strategy. We don't even need to kind of do the analysis. We basically need to understand what the market is doing before the news, and we make that decision. Can we trade this or can we not trade this at all? Okay. So minimal time expenditure on trading. You know exactly when to access the trading platform and what actions to take. And the trading process itself can be completed in just a few minutes. We stayed on a little bit longer last week. In fact, I think most of us were probably holding on to our positions until Monday or Tuesday. But yeah, if you take a look at some of the records that we do during our live trade, some of the trades only lasted less than a minute. Okay. All right. So obviously, there are going to be disadvantages as well. The disadvantage is number one: market situation doesn't always develop as predicted by logical thinking and common sense. Sometimes we have a good number and it takes time for the market to process, so the initial reaction could actually be the opposite. Sometimes it just doesn't make sense, and this is kind of a major disadvantage, I would say, because most technical analysis just doesn't work. And what we understand about the market, what we anticipate about the market, just sometimes doesn't work as well. So sometimes the logic goes out of the windows. Not all the times, but sometimes it does happen, right? Not all news can cause significant market reaction. As I always said, we already order it by the order of importance. But sometimes even the high impact news doesn't create a stir in the market. We can take a look at January's CPI number. and the NFP numbers, it doesn't cause a lot of impact. It actually doesn't shift the market away from the range bound market condition. Not until last week's NFP number that market kind of gets shifted away. So yeah, sometimes a high impact news might not even move the market as well. So we need to be cautious about that as well. And number three, if you're unable to accurately guess the market direction or analyze the situation incorrectly, you may experience significant losses as well. And the other thing about news trading, let me just brief you on this one here. Volatility goes up really high. When volatility goes up, you should expect liquidity to dry up as well. Sometimes we can't get in at the price that we want. Sometimes if we do get in, the spread is big because the liquidity dries up. So you got to be careful during very, very high impact news releases. Sometimes we get these problems. Okay. All right. Let's take a look at some of the news to trade here. So let's split it up. So we got two different classifications of news. So we have the hot or unexpected news. This would include terrorist attacks, military conflicts, what happened in Ukraine, Russia, that would fall into that. What happened in the Gaza Strip, that would fall under military conflicts as well. And the Japanese tsunami, for example, that falls under natural disasters. 9/11 falls under terrorist attacks. So these are unexpected news. These are unscheduled news. So this could have an impact into the market. During such time, typically national currencies become much stronger as investors get rid of stocks which are about to fall. Right? Sometimes it causes that. Maybe the global financial crisis as well happen. If the stock market crash, that would create a little bit of an unexpected news. We don't know when that's going to happen. Okay. Then we have the other one. This is the periodic news. This comes out regularly. It includes the following reports on companies and everything related to them. It also could be central bank meetings and monetary policy decisions, like last week's FOMC. Last week? Yeah, it was last week's FOMC decision that was scheduled, right? The forex market reacts to them by raising and lowering rates. We got our quarterly GDP reports, that's scheduled. We have the inflation index, the CPI, which is going to be on next Tuesday. And then next Thursday would be the PPI, I believe. The core inflation is also going to be on Tuesday. So these are pretty much scheduled events. So you already know when they're actually going to get released. So we already have a little bit of an expectation into the numbers for this. And then we have the indexes of business activity in manufacturing and services. These are the PMIs, the manufacturing and services PMI. Could be from ISM, could be Flash, right? And then we have the unemployment data, which was released last week. This is basically the unemployment rate, the NFP numbers, the average hourly earnings, which was released last week. So we got our periodic news. This are scheduled news. We know when they're going to get released and we can actually be prepared for it. And the other one, again, is the hot, unexpected news, right? Events that we can't predict, events that no one knows that could happen, that could actually drive prices up. For example, the conflict in Gaza, that actually started last year already. But yeah, it drives oil prices up. It drives gold prices up. It causes a little bit of a shock in the market as well because we don't know how bad the situation is going to be, how long it's going to be, right? These are unexpected. And we have the scheduled ones. The scheduled ones are the stuff that you have on your economic calendar, which I'll show it to you later, where we are going to get access to the economic calendar. Okay. All right. So before we get on to the nitty gritty of news trading, I want you to understand the phases of price movement. And market will always be in these phases. You just need to understand what kind of phase it is. Number one is the accumulation phase. And at this phase, the most informed and forward-thinking investors enter here. Okay, so this is where we are actually setting our position. We are actually setting our position during the accumulation phase. And why are we doing it there? Because during the accumulation phase, you are going to get the best entry. Okay? You're going to get the best entry into the market. Because a risk-reward ratio, you can actually measure it in terms of figuring out where your stop losses are during the accumulation phase, you'll get it right. So the accumulation phase, if I were to tell you, it's basically just a range bound market condition. But a lot of traders that understand where the market is going to go, is going to place their trades during the accumulation phase. And then when the news gets released, market starts moving, and then it starts the participation phase. So the technical analysts are gonna technical base analysis are gonna start entering here. Okay. So maybe during the news releases, it breaks out of a range. People start coming in. This is the participation phase. And then after the news, a lot of traders are going to jump in. Right? This is actually the distribution phase. Public will enter this at this place because they are receiving outdated information. And in the distribution phase, people that jump in during the accumulation and participation phase is actually trying to exit their positions. Okay. This is also where the smart money is going to start selling their positions to the less informed investors, leading to a potential reversal. And you need to understand which phase the market is at before the news release. Sometimes, before a news release, an instrument could already be in the participation phase, and we typically want to avoid that. We only want to enter during the accumulation phase, because if the market is already in the participation phase, it becomes too risky, because markets has already moved away before the news gets released, and sometimes the stop loss is just too far away. Okay, so again, there are going to be three phases: accumulation, participation, and then the distribution phase in the market. Okay, all right. So general rules for news trading: you basically need to study the market and analyze the dynamics of that currency pair. So what do I mean by that is that you need to understand that not all news are going to have the same impact. For example, a news about New Zealand interest rate decision is probably not going to impact Canadian yen, for example, because they're not even related or anything like that. They don't have any correlation. So you need to study the market, and basically you need to understand the dynamics of that currency pair as well. For example, the CPI release that's going to get released on Tuesday, that will impact the Euro USD, that will impact the Pound USD, that will impact the Dollar Japanese Yen, but it will not directly impact the Euro Yen. It will not directly impact the Sterling Yen. Okay? Now, you need to also assess the reaction of a currency pair to that latest news itself, and you need to prepare for trading by making relevant levels on the chart, right? I'll show you that to you later. We also need to decide on our trading tactics, including when to open and close that order. We need to choose an appropriate trading time frame as well. Typically, during news releases, we want to go on a small time frame. The highest time frame I would go to look at my levels would be on the hourly time frame. But sometimes, in fact, no, most of the times I would go on the 15 minutes time frame to get my levels on the 15 minutes time frame. Okay. So I don't know. The spam on the chat is kind of distracting me right now, but hopefully it'll go away. But yeah, everyone, let's focus on this one here. Okay. So make sure you choose the appropriate trading time frame. I wouldn't go anywhere higher than the hourly time frame to set up my level if I were to trade the news. Right? Typically, most of the time it'll be on the 15 minutes. And then number 6, we need to determine the maximum risk for each order and consider using stop losses and maybe trading stop losses if the order is already running. Also, you need to decide on the terms of the deal. How long do you want to stay in that trade, or do you want to keep it for a more of a long-term position? So, as I said, typically when we trade our CPI or NFP release, we don't want to stay too long in the market, because market reacts to those news differently, and everyone has a different characteristics, especially with the NFP numbers. You can kind of whipsaw a little bit as well. So we try to get in and out as soon as we can, but sometimes, like last week's, the data was so good, it's irrelevant to stay out of the market. It's just good enough to have that initial short-term trade become a long-term trade that kind of moves the market. Okay. All right. So these are the pending orders that you can use. We got 4 different pending orders. The first one is a buy stop order. These are orders placed above the current market price, and if you expect price to continue to go up, you want to use a buy stop order. Meaning, if it hits resistance and it breaks resistance, you want to open a long position. So you use a buy stop position, right? Conversely, if you expect the support to be broken, then you want to use a sell stop. These are order placed below the current market price, and you expect price to continue to fall down. Okay, I'll show you the calendar soon, but it's there. Okay, so actually, let me prepare it for you. Okay, so let's get back to track. So we got a buy stop, we got the sell stop. So if you expect the resistance to be broken and you wanna trade in the on that breakout, if you wanna trade the breakout, right, breaks to the upside, then you wanna use a buy stop. If you expect a breakout on the support, then you wanna use the sell stop. The other two is the limit orders. All right, if you expect the resistance to hold and you expect the market to maybe go up a little bit but not able to break resistance, then you want to have a sell limit order. This are order placed above the current market price and you expect market to go up and then go down. The reason why we place a sell limit order because it will reduce our stop loss to a very small stop loss. Okay, and also if you expect support to hold, you want to wait until price gets a little bit cheaper before you buy into the market, then you can use the buy limit order. So this are order placed below the current market price and you expect price to continue to go up after hitting your support. Okay, so again, there are only 4 pending orders. That's going to be your stop orders, which is buy stop and sell stop, and then you have your limit orders, which is going to be your sell limit and your buy limit. Okay, so those are going to be your order type. Now, let's take a look at the buy stop and the sell stop strategy. Well, we are going to be looking at a consolidation phase. We are looking at that accumulation phase that we talked about. And this is basically the quiet range bound market condition before any news releases. So you want to identify the corridor of volatility. So you do want to know, okay, where's the upper range here? You know, if price doesn't break this level yet, what if it breaks this level? Those are the levels that you want to identify. So you not only want to look at one direction, as I always said, when we trade the news, I come in to trade the news without any bias at all. I don't have any views of the news, right? Sometimes people jump in and say, what do you think about gold? Where do you think it's going to go during NFP and whatever not? And my answer is this, I don't know. Let's wait until the news get released and we only react to the news releases, okay? So typically what we want to identify is a range bound market condition where there's actually no trend. So it's actually good if a lot of traders are confused and waiting on the sideline and market is just in a range bound market condition. Because then we can use a buy stop and sell stop strategy once we identify the corridor of volatility in which we know where the support is, in which we know where the resistance is, and we want to have our buy stop and sell stop. So do this before the news gets released, and when the news gets released, this is what typically happens. You typically are not able to react to it, but we already have the stop orders. So even before the news gets released, we already have our orders placed. When the news gets released, it will activate that buy stop. We're in a long position. Immediately cancel the other position. Okay, so if we have a buy stop and a sell stop, buy stop gets triggered, then you need to close the sell stop immediately, and the sell stop becomes your stop loss. Okay, so what is the advantage here? The advantage here is that I can trade more than one currencies, more than one instrument during the news releases. Because manually, if I were to switch charts or if I were to switch order types during news releases, if I were to place market orders, sometimes I'm not able to react quickly. But if I were to have the buy stop and sell stop placed in before the news releases, I can have the buy stop for Euro USD, Pound USD, dollar Japanese yen, whatever. You know, I can have 5, 6 currencies to trade. And when the news gets released, it will automatically triggers all these breakouts at the same time. So this is where this is actually how we trade the news. Typically during our NFE and CPI trade, we trade the Euro USD, Pound USD, the raw Japanese yen, gold. This four is typically the one that we trade. Sometimes we'll trade the Aussie USD, sometimes using the USD, dollar Canadian, dollar Swiss. Okay. So yeah, once the trade got triggered, you need to close the other one. You need to cancel the other order. Otherwise, it's gonna whipsaw and take out both orders, and then you're gonna be hedged. This happens sometimes when the market moves too quickly. It goes up and down at the same time, very quickly before we can actually react to it. It opens up all of the trades. Okay, but in the scenario where actually the buy stop gets triggered, you can move your stop loss to break even if you want to. Once the trade starts running, then you have your risk-free zone, right? Typically, I don't recommend doing this because if you're doing the news trading on a smaller time frame, the range might look big on the candle, but it's actually not big enough to create to kind of withstand market movement. So typically, we don't immediately move our stop loss to break even. But if you are afraid and if you don't want to risk too much, you can move your stop loss to break even once your buy trade gets triggered and let it run. Okay. All right, let's do a little bit of a practice. But before that, I want to show you the calendar first. You have a few options. You can use Forex Factory if you want to. You can go to Octa's website as well, and they actually have a trading calendar. But I use Trading Economics because I can take a look at a much more detailed number on this one here. So someone was asking, I didn't see the number for next week. I can go into prices and inflation, and the US inflation is going to be on February 13th, going to be on Tuesday, and this is the CPI numbers. Okay. So next week we're anticipating, we don't have the consensus for next week yet, but the forecast is currently at 3.4%. But we'll get a consensus by Monday. But in terms of all the core inflation is expected to kind of shrink down a little bit to 3.7%. But yeah, the inflation is actually there. And there's also impacts. So you can actually take a look at this week, for example. What's really high impact? We actually don't have a lot for this week. In fact, we've got inflation rate from China today, and that's pretty much it. For tomorrow, we have the Canadian unemployment rate, and that's it. Everything else is pretty much next week. We have the US inflation, we have the UK inflation, you got UK GDP. So we know next week it's probably going to be sterling that's going to move the market a lot more. And we also have the UK retail sales number as well next week. Let's move this out of the way first, and I want to show you how to place the stop orders and what to look out for. So let's take a look at the Euro USD first. So if I can pause here for a little bit and show you what happened during the NFP release, and I believe this is during the NFP release. Yeah, put on a vertical. That's actually during the NFP release. So I want to show you what happened before the number get released. And we were looking for the corridor of volatility, right? We take a look at the movement on the 15 minutes time frame. Market is actually pretty much kind of in a range bound market condition between range, right? We already have that resistance at 1.0897. And we got support at 1.0869. So what we do in this case here is that, assuming we are at this point, the news hasn't got released yet, we are preparing to trade. This is basically what we did last Friday. Right click on your MT4 and go to trading, and you create a buy stop, right? So you can create a buy stop by just right clicking on the chart. That's placing an order above the range that we have. This is the corridor of volatility. So the range of support and area resistance that we have, this is the corridor of volatility. So you want to have your buy stop above this, and your sell stop would be below this. So what happens during news releases is the So obviously I can't place this here because price is currently lower than what it is, but we place our order there. So when the news gets released, it hits our order and then it goes down. So when that happens, we need to cancel this order. Okay. So you can see how the progress is from last week's NFP number. It pretty much is in a one-way directional movement. I already explained this in the outlook this week, and also if you were there during the NFP session last week, you would understand the breakdown of the numbers as well. Okay. I'll answer that in a minute, but this is how we use the buy stop and the sell stop orders. Okay. So assuming, let's say, we have a news that's gonna get released today, which is there's actually one. I believe the unemployment claims is actually gonna get released soon, right? If we take a look at the current condition, I'm assuming there's going to be a news here. We have a little bit of a floor on the Euro USD over here, so I could actually create a sell stop just below this level. And maybe if I want to do a breakout, I would look at where the upper range is. I would say it's somewhere there. I would have that buy stop. Okay, so if assuming in the next 5 minutes there's going to be a news release, I could do this buy stop and sell stop. So in fact, I like a short on the Euro USD right now because if it does break that, it could potentially lead lower because that's going to break a little bit of a support there. So I'm going to have a little bit of a lower sell stop today at 1.0750, right? Not in the context of news, but yeah, just looking at it, I'm looking at that range. I'm expecting a breakdown. I'm currently expecting maybe 1.0750 to be broken. So yeah, maybe it's good to have a short position there. So that's buy stop and sell stop. So if I expect price to break this right now, I want my sell stop, and I think it could potentially break. So I'm gonna leave my sell stop here. Do I need my buy stop here? If you want to trade the range, yes, you can, because that's the upper resistance. And on the assumption that the price breaks above that resistance, then you want to be in a buy position anyway. For niche trading, how do we calculate position sizing? Select one pair or diversify to a few pairs? I would say it depends. If you don't have a lot of currencies to trade and if you're not familiar with it, it's okay to put it in one or two currencies. You don't actually have to split it up. For me, news trading, I always trade the euro, pound, dollar, yen, and gold. But on any others, if I were to trade the news, sometimes I make a decision, right? If I want to invest more in pound USD or do I want to invest more in euro USD, I will look at maybe the euro pound, for example. If I find that the euro pound is weaker, then I would actually put more position on the pound USD rather than the euro USD. Just saying. So we do know which currency is actually going to get stronger as well. But yeah, to answer that, it's very personal. It really depends. It comes down to yourself. Do you want to diversify it? I don't think there's actually a problem diversifying it. For news trading, sometimes having too many positions is not a great idea as well, because you need to understand during news trading the spreads widens as well. So if you have a lot of positions open, those positions are gonna have a wider spread cost. So sometimes you probably don't want to have that as well. But if you really want to diversify and kind of hedge it, then yeah, I would say open it with a lot more instrument. But let's say if you're focused on a certain currencies, for example, then you probably want to pick just a few. Okay. All right. So yeah, this is the buy stop and sell stop. So for now, can I use it like that? I can. So let's take a look at the news today. What do we have today? Today on Thursday, we've got unemployment claims. Weekly unemployment claims, by the way. Right, weekly unemployment claims is gonna get released 1 hour from now. So yeah, in 1 hour's time, you can actually try to use the buy stop and sell stop strategy if you want to, but you got to be really careful. If you look at a market that moves like this, that's already started moving, and it's very hard for us to identify where should we put the support, because we actually don't have a visible support. Then you don't want to trade this kind of currencies during news release. So let's say in 5 minutes time we're waiting for the news to be released and the currency is already moving like this. We typically kind of stay away from it. I don't want it to be moving before the news gets released. I like it if it moves in a flat market like this before the news gets released. Okay. So every time it's flat like this is prone for a breakout. This is what we call the accumulation phase. Once it started moving, this is already in the participation phase. And then from here, it could become a distribution phase where market could actually snap back. So be very careful. You don't want to trade the news when it's in the participation phase. It's always during the distribution, the accumulation phase, right? So we want to look at a range bound market condition. We want to look at identifiable corridor of volatility. Okay, let's go back here. This is what you want to be looking at. This is the exact scenario that you want to look at before you trade the news. If 5 minutes before the news is released and you already see the market moving like this, then you cannot employ this strategy at all. You can probably employ the buy limit and sell limit strategy, but you definitely cannot employ the sell stop and buy stop strategy. Okay, let me answer that. Position size calculated based on the distance between the buy stop and the sell stop. That would be calculating your risk. So the risk would be between the buy stop and the sell stop. But yeah, in terms of position size, obviously it would depend on your equity as well. Like how big is your equity? Can you afford to open up that much of a position? But if you say, if I were to have a buy stop here, for example, let's go into the Euro USD. Let's measure the difference between our buy stop and the sell stop. This is about 40 pips, right? Because the buy stop here, if the sell stop gets triggered, if I were to have this stop loss, if I were to have this sell position triggered, my stop loss would actually be above the buy stop. Okay, so yes, the difference between the sell stop and the buy stop is basically what you're risking. Does that influence your position sizing? It should, right? Because it measures your risk. But the actual position size itself, in terms of how big that position should be, really depends on how much equity you have and what kind of risk you want to take on your trades. Okay. All right. Excuse me. But yeah, definitely want to be in a consolidation phase before we trade the news. The market started moving before the news gets released. You typically do not want to see that happen. Okay. All right. The other one is the buy limit and sell limit strategy. So for example, if we look at local previous high here, and you want to place your sell limit there, maybe you look at an order block, maybe you look at a fair value gap, and then that's where you want to place your pending order, right? So what we expect here is that market goes up, but it will fail at resistance and drops down immediately. So let's take a look at this one here, right? It goes up, triggers the sell position, and then immediately goes down. Obviously, the same thing. You can start locking in your profits. You can move your stop loss to break even if you want to. But this is how it works, right? Unlike the previous one where we expect a breakout, this one here, we expect support and resistance to hold further progress. We expect market to bounce off this resistance and support and then goes in and just goes and reverse the initial movement. Okay, so that's basically what the buy limit order. So let's change this and take a look at the Euro USD. For my orders is triggered. Oh, actually, you know what? I'll leave it there because I think the Euro USD might actually go down a little bit. So maybe I'll place this on the Pound USD. Taking a look at Pound USD here, do I expect this to go down a little bit more? It could. It might actually go down a little bit more. For example, might actually go down to about 1.2585 there. So just in case, if I were to look at this and I say, okay, is there any significant support that we could have there? What about the difference here? Maybe we can take a look at this difference and I say, could this be a level where we anticipate price to bounce? No, I don't, right? But I'm just giving it as an example. So just in case, let's say price goes to about 1.2575. I can create a buy limit here. 1.2575, yeah, about there, exactly. So what I'm expecting here is that I expect price to go down a little bit. Okay, to about there. And then from there, it might potentially bounce higher. So I can have my buy limit over there. But I don't have my sell limit. So the use case scenario for this one here, it's rather unique because it will require you to have an understanding of the market better. If you don't understand technical analysis, then it's actually going to be very hard for you to use that. So let me give you a little bit of an explanation here. So we have the Aussie USD. This is the current projections on the Aussie USD. So if let's say we missed out on this one and price goes down a little bit lower, okay? And if price goes below this level, I want price to go back up here, maybe about 64.75 before it goes down. So I'm just assuming if price is already below that level, I expect price to kind of pull back a little bit. Okay. So let's take a look at some of the scenarios here. What can we look at? The Euro USD, for example, or the Pound USD. This is already dropping down, and I think it's going to drop down even more. But just in case it didn't drop down, and just in case it kind of pulled back up a little bit, if we expect price to maybe bounce here, right? We can have our buy limit just somewhere down here. Okay. Because I expect price to maybe go back up to 1.08. We could do that. Or if we say, you know what, it's too low. I don't think this is a great price to enter. I think if it goes back to 1.08, I can probably sell it at 1.08 and I'll get a much better entry for my trade. Right? So the buy limit and sell limit strategy, it's not something that you typically use during news releases. Unless you are very experienced and you understand the technical behind it. Typically, technical knowledge will prove useful in using limit orders. But yeah, typically we tend to steer clear of limit orders, and we say, you don't know what to do with it, don't use limit orders, because it's actually going to be very hard to predict a reversal in the market. Number one, it does carry a lot of risk behind it. It's not a breakout strategy. We're not riding on a momentum. We are actually kind of anticipating a reversal to happen in the market. So if you don't understand technical analysis, try not to use limit orders during this trading. But if you do have a reason to use limit orders, then yes, feel free to use it as an option for you there that you can actually use. It's a type of pending orders that you okay. All right. So let's take a look at another case, for example, maybe the dollar Japanese yen here. Maybe we can use this as a use case scenario for a limit order. Right. So I'm looking at this and I say, you know what? I missed out on this one here. Maybe we should see if price comes back to the previous resistance. That's going to be about 148.75. So I want to buy back in on the dollar Japanese yen. By the way, this is actually very viable because we have just broken 148.50 today. So yeah, if price moves there, I can create a buy limit down there for the dollar Japanese yen. And I'm expecting price to go up a little bit higher. I can have my take profit maybe 50. My stop loss is about there. In terms of risk, this is going to give us a much smaller risk reward ratio because we are closer to the stop loss. It's about 20 points, and in terms of risk reward ratio, it's going to be a lot more because our target is about 127 pips, right? So that's a lot more. It's about 1 to 6 in terms of risk reward ratio. Okay, But yeah, for the dollar Japanese yen, genuinely, I would say, yeah, I would anticipate price to come back down, maybe pick it up 148.75, and then it might actually bounce back up. For the Euro USD, I think it just triggered a sell order. So I'm assuming, let's just assume this is how news is released. The sell order got triggered, so I need to cancel my buy stop order. And obviously, I need to place my stop loss as well, right? So my stop loss would be above here. And let's say my target would be at this low here. Maybe I'll go for a little bit lower. I'll go for 1.07. Right? But yeah, always the case, use stop loss and take profit levels. I'm going to leave this one here running. I got the buy limit on the pound USD just in case, right? And the buy limit on the dollar Jap. Okay, I'll keep the Japanese yen. The pound USD is just an example. Okay. So you can also trade after the news releases. Typically, when we use the limit orders, we will use that after the news release, because during the news release, it's always the sell stop and the buy stop that's going to react first. It's typically not the limit orders. But once we are able to analyze what's going on, then we use the limit orders. I think so. The limit orders use case scenario is one, if you understand technical analysis very well. And number two, if you finish analyzing the market, if you finish analyzing the data, you want to place a trade, a pending order after the data is released, then you can. Okay. All right. So before we go to the Q&A session, let me give you a few questions. You guys are watching this, but yeah, feel free. We'll go to the Q&A session soon. Feel free to ask anything about news trading if you want to. But just a quick test. All news can be divided into two categories. What are they? Okay, and what type of orders is most often used in news trading? Previous sessions, I take two answers, but tonight I would only take one answer. What are the type of orders that is actually most often used in news trading? And what type of pending orders do you know from tonight's session? And when should each type be used in trading? Okay. So yeah, if you guys are following the session, news session can be divided into two categories. What are they? I'll give a few minutes if you guys want to answer that. I don't think we have a giveaway, but you know, someone already answered the second one. What type of orders is most often used in news trading? David answered stop orders. Yes. Stop order is basically the most often used pending order when it comes to news trading. In fact, pretty much all news trading relies on stop orders. Okay. Unforeseen news and scheduled news. Yes, all news can be divided into two categories. Odd one, unexpected, unforeseen news. Yes, and the other one are scheduled news. Okay. So in fact, on the scheduled news, I actually want to bring in bls.gov. For bls.gov, we can actually have the schedule for the whole year. So I would do, if you guys want to know, the key important one, the CPI and the NFP number is released by BLS, Bureau of Labor Statistics. We can actually mark this on the calendar. So we already know this one is actually going to be on February 13th. Next month is going to be on the 12th, April 10th, May 15th, and whatnot until end of the year. So we already have all this scheduled. Yeah, it's all there. So there's no excuse saying, oh, I didn't know that CPI was there. Okay. I think someone was asking just now. I didn't see the CPI event on next week economic calendar, but yeah, it's there. But just in case if it doesn't show up, maybe it's the settings, maybe you filter something out. But yeah, if you really want to know, you can go to websites like the official Bureau of Statistics website. Obviously, you got BLS in the US. Obviously, you've got the every country has their own statistic body, I would say, and just go to their website and be able to find that news. Okay, so the last one, what type of pending orders do you know? Obviously, it would be the stop orders and the buy stop, sell stop, and then the limit orders, the buy limit and sell limit. When should you use them? I think for the stop orders, you can use them during news releases. And the limit orders, you use them if you understand the technical behind it. and you use them after the news release, right? Those are going to be the time you want to be using your limit orders. Okay. All right. So this is the code again. Again, I haven't updated this, but the code is non-farm 2024. Very simple. We just changed the year. But yeah, use this CW deposit bonus if you're depositing into your Octa trading accounts, and then we'll go on to the Q&A session if there's any questions regarding news trading. Be more than happy to answer anything about news trading. Oh, no questions? Okay. Like we got ahead of schedule earlier. But yeah, for stop orders, what's the win rate for news trading? Okay. What's the win rate for news trading? Statistically, obviously it will change, but statistically, the stop orders that we use, the win rate since we ran this NFP and CPI sessions with Octa, we started mid-year in May or April last year. The win rate so far, I would say about 70%. That's our win rate combined, right? The CPI and NFP. But statistically, I will need to find out and review it. And I'll probably give you that answer next week. For tonight's news trading, would the Euro USD and Pound USD be preferred for the unemployment claims? It shouldn't have that much of a huge impact, but we'll take a look at the Euro Pound, for example, here. For the Euro Pound, because this one here is inside the Ishimoku cloud, I do expect a little bit of resistance coming in soon for the Euro Pound. If the data is strong and the Euro USD gets pressured lower and the Pound USD gets pressured lower, there might be a higher probability that the Euro USD could go faster than the Pound USD downside. This one here could slip up much faster than the Pound USD. Okay. I have no question. Just want to thank you for the time. Really learned a lot. Thank you so much. Love that feedback. If I have an open position before related news, do you suggest to close position before news? If you are not sure, close that position. If you're not sure, right? I would say if you starting to doubt yourself, this is look. It's probably something we talked with you about during the psychological webinar. But psychologically, if you are not sure about something and you have that bad thoughts, right? Okay, I'm not really sure. Could it have an impact? Yeah, I would say close your position out. Look, during these releases, David was asking what's the win rate, and I would say every time we go into that news release, it always start at 50. It always start at 50-50. The probability is always at 50-50. So we can have our analysis. If you're a swing trader, those are not going to be affected. If you are a scalper though, or intraday trader, that news release could actually have a negative impact on your trade. Okay, so it really depends. If you're a short-term trader, yeah, I would say get out. If you're a longer-term trader and you have a longer-term view of it, then I say it wouldn't matter, right? But if going into that session, it's always 50-50. So your position could actually get reversed, right? It could be right, you could be wrong. But the risk, if you think the risk is too much, get out. Now, if I were to say like, oh, unemployment claims, should I get out before unemployment claims? I'll probably say no, because unemployment claims doesn't have that huge of an impact. But if you have a position before NFP and CPI, should you get out if you're not sure? Yes, I would say yes. Okay. Cool. So yeah, it really depends on the situation itself. But you make that decision. Should you get out or should you? Question? Yes, Frank. What questions do you have? Personally, I would close out my positions if I'm trading intraday on NFP and CPI. But if I'm doing my swing trades, it's more a position size, I would leave it. Yeah, I would prefer to stay out. I would prefer to stay out too. I actually don't like trading news. I would prefer to process that news. As I said, trading the news is different from fundamental analysis. I base it more on fundamental analysis. Trading the news, yeah, it's good. It's fun. It's exciting, right? But it's not for everyone because depending on your risk profile, you probably don't like that. How to resolve situation where price swings both way and caught both buy and sell stops? That's the toughest one. And David, if you reviewed our sessions from last year, I think there were about 3 or 4 instances where that happens to us, and it was a headache because our position basically got hedged, right? We basically locked in the loss pretty much because the buy stop and sell stop were triggered. So, for example, on the Euro USD just now, right? We had a buy stop there. So we were locked in and we basically have a negative 30, 40 pips. No matter where the market is going, we are locked in on that 30, 40 pips. Once it's locked in, we'll probably need to analyze the market and make the decision which one is the wrong one to get rid of. But that's the problem. That's where the hard part is because it's like you have to make that decision twice before and after the news. So it's hard. Is there an easy way to do that? No, there isn't. Just do your analysis and then make a decision which one you want to hold. You want to hold the buy or you want to hold the sell? There's no easy answer to that, unfortunately. For me, the aftermath is more interesting. I would say so because, like the NFP, typically about 9 out of 10 NFP, it kind of fade back. Last week was the 10%, right? Because the data was so good last week, it's ridiculous. I don't think it'll even allow the market to come back. Okay, but yeah, win rate. Don't call me on it, but I'm pretty sure we are about above 60%. I would say 70%. That was our win rate ever since we ran this monthly NFP and CPI session. But that's actually very interesting. I will actually tally it up. I'll go back to the previous sessions. It's all recorded. It's all there, whether or not we're profitable or not. Right? We'll probably tally up. Say our take profit or buy trade is 1.3450 and current price is 1.3470. At what price trade will close? Say our take profit of buy trade is 1.3. Current price is 3470. At what price trade will close? It will close at 1.3450. In your view, is news trading a viable part of our trading strategy? It's viable. It's one strategy, right? I would say it's like, yeah, it's kind of like, maybe it's a trend following strategy, but it's more of a breakout strategy, I would say. If there's volatility and momentum in the market, why not take advantage of it? And that's why we're running these sessions every month because, it can be traded. A lot of people say, you can't trade it. Sometimes I would say, don't trade it, right? I say don't trade it. It's not that it cannot be traded. It can be traded, but you need to understand how to trade it. So is it a viable strategy? I would say yes. During high impact news releases like the CPI and the NFP, if the option is there, and using a buy stop and sell stop strategy, as I said, it's so simple. It's ridiculous, right? Well, that's what we do. Ever since we started this webinars for the live trades, that's the only thing we do. We only trade the buy stop and sell stop strategy. And I'll go back and tally it up, but probability is definitely higher than 60%. So is it a viable strategy? I would say yes, it's a viable strategy, but did you go blindly into it? No. And that's probably why we're doing this news and theory session. But I know the viewership on this second session is pretty low because we're not trading live during these sessions. But if you understand the theory, some of the disadvantages, what to look out for, yes, it's a very viable strategy. It was about unemployment rates. It's better to wait on the market to move first. Um, depends. Depends, right? Last week was a surprise, so I don't think it's a no brainer for last week. We saw the data got released. It's good that we already have our stop orders, but if you want to add more positions to it, you can. Can you wait until the data gets released to get better, more information? Yes, but are you gonna get the best price? Probably not, right? But the best price is always during the breakout. It's always during the accumulation phase. If you have an order during the accumulation phase, as I said earlier, right? This phase, the accumulation phase will give you the best price. Participation phase and distribution phase is probably after the news. It's not going to give you the best price, but if you are so sure, you can analyze the numbers. For example, like last week's NFP numbers, and unemployment rate was good. NFP was double the consensus. Previous a month was revised up by 112,000, and then the average hourly earnings doubled from 0.3 to 0.6%. It was so good. It's a no-brainer, right? We can add into the position. Yeah. Should you wait until after the news? You can. Is it ideal? Depends, right? If you're trading within the day, if you're scalping, if you're day trading, you really want that volatility, and news releases provide you with that volatility. So, is it a viable strategy? Really depends on your risk profile. Do you like it or not? Some people stay away from it. Like, you Dwayne doesn't like it. Stayed away from it. Do I like all news? No, I don't like all news. So I like CPI. Oh, I love CPI so much, right? Do I love NFP? No, I don't love NFP, because that's some of my rules that I don't typically open a lot of trades on Friday. But during CPI release, yeah, I do trade the CPI. Can the same news trading strategy be used for high news of other countries like the Euro Pound? And yeah, you can. So we have the schedule for next week, right? So let me show you the schedule for next week. So we got the UK retail sales next week. You can use this strategy if you want to. Core retail sales, obviously, it's still in the US retail sales number. Yes, you can do that as well. You can do that for UK CPI as well if you want. US CPI, yes, you can do that. It works for all other countries as well. It's not limited to just US. But when we talk about news trading, the most traded news, the CPI and the NFP, right? So that's what we do. I think beyond that would be the GDP, and then beyond that would be retail sales. But yeah, you can use this strategy, not limited to just the US economy. One follow-up question: for buy trade with take profit at 1.3450, if current price is 1.3480, wouldn't trade close at current base? If you have a buy trade and your take profits at 1.3450 and the current price is 1.3480, you would already be out of the position. I don't know what you're looking at. If you can tell me what currency pair you're looking at. But the logic is this: if your take profit is at 1.3450, the current price is at 1.3480. So 30 pips before the current price, you should be close out with your profit. If it spiked, all right, I don't know what currency you're looking at, but if it spikes, wouldn't the trade close at current best available price? No, it would close at whatever order price that you have. So don't expect that because of the spike, your take profit at 1.3450 becomes an extra 30 pips profit just because of the spike. No, it will still get filled at 1.3450. Right? But when you open a position, that's why it's different. Sometimes you can't get in at that price. But if you want to open the position, but if you close the position, it'll typically just lock in at 1.3450. I get what you're trying to say. Price spike, it jumped up, right? It should close in at 1.3450. It should still close in at 1.3450. But yeah, I doubt that you are actually gonna get that rare extra profit that you use typically in the market. All right, cool. All right, next, let's wrap it up for this week. Next week on the 13th, we are going to do our live CPI trade. So we'll also go through what is the CPI that we're looking at. We'll do some theory first because that's basically what we do. We talk about the theory first, maybe about 15 minutes, and then the other half of the session would be for the live trade. Spikes come with wider spread. Depends. I would say it depends. Sometimes you see the spike, it doesn't necessarily mean that it has to have a wider spread. Most of the time, yes, but wider spread only happens when liquidity dries up. All right, cool. Let's wrap it up for tonight. Thanks for joining in. So I'll see you guys on the 13th, which is on Tuesday, where we're actually going to be trading our CPI live. Very, very interesting to see what the CPI is. Is it going to pop back up a little bit like what the FOMC is expecting, or is it going to drop down significantly and then market is going to be in a euphoria with a rate cut again? So we'll see. That's going to be on Tuesday on the 13th of February, which is going to be on next week. So good luck with your trades for this week. Have a fantastic weekend ahead. Stay safe. Don't get sick like me. And I'll see you next week.